All right, so today we are looking at my dividend portfolio here on M1 Finance. And let's go ahead and start breaking some stuff down. So first and foremost, you can see here our current value on this portfolio is sitting at $27,000. This is a brand new milestone for us here. First time we hit over this $27,000 milestone. Will it stay there? I don't know. We'll see what happens in the long run. So let's kind of take a look and see how we've been doing just over the last little while here. If you have been following along, you kind of know where we're going with this portfolio. It's really just so that way in about 14 years or so, we can start living off some of these dividends. As you can see, we are named Dividend Dentist. Now, I do have non-dividend paying stocks in here, so don't hate on me too much in the comments, but we'll kind of get into that here in a little bit too. So you can see here for the last day, we actually gained about $262, which is not bad. The last week, about 245. So the week has kind of been up and down here. In the last month, we're actually up $712. Not too shabby there. It actually would have been higher if I didn't do some different moves that I did recently. In the quarter, you can see here we're up $676. The year, $4,200, and then in the lifetime, it's actually $4,147 with everything that was going on. Now, one thing I do want to show people here too. Let me zoom in here. So this is the value over time on our portfolio, and you can see here the 23rd of January 2019. We start with $100. That's all we put in here, and over time we just kind of got more comfortable, put more in every single week, every single month, and then you see that account grow. Now, for those people who are interested in seeing the unrealized gains, we are sitting at 3,181, which is about 13%. No thanks to some of the new stocks that I just added that brought our percentage down quite a bit. You can see, let me go ahead and shift this around. So you can see here we got like Airbnb, Etsy, and Square. These are the newest ones, and they're down pretty significantly from when I just bought them. But no fear, I'm in it for long term, and I know some people are kind of like, well, if you're supposed to be a dividend portfolio, stock account, why do you have some of these non-paying dividend stocks in your portfolio? Well, there's a couple different things for it. One, I'm not just strictly dividends in this portfolio at the most part. I do still love dividends, like a lot. Let me zoom back out here a little bit. Actually, that might be too much. I still love them, but I want growth as well too. So I do have like a growth sector here, as well as some of those other stocks you saw like Airbnb, Square, and Etsy. They're kind of like mixed in with some of their respected sectors here as well. Now I kind of put them in sectors that I feel like kind of worked well for me. But nonetheless, I still think that even though they're not paying dividends now, that maybe in the future they could. And let me kind of show you what I mean by this. So we're on Seeking Alpha, and I'm going to go to Apple. So Apple pays a dividend. Most people know that. It's not the best in the world. It's actually not even close to the best in the world as far as yields, because their dividend yield is 0.68%. But check this out. If we go to their dividend history, they've only been paying dividends for a couple of years, and I say a couple, but it's obviously longer than that. So when did they start paying dividends? In 2012, right? So if you had Apple before that, you were just focused on growth, and that's great. But imagine if you had Apple stock during this time. I'm not even on the screen anymore, guys. Hold on, where did I go? I don't even know where I went. But anyways, you don't need to see me. So right over here, if you were just buying this with the intent of it being growth stock, that's awesome because you got a really good amount of growth. But then check this out. Look at all these dividends that you were starting to get paid out if you had ownership. And this is what I love. If you guys have been on the channel before, I love looking at the dividend yield. So the dividend yield is really important. A lot of people talk about the 4%, right? The 4% rule when it comes to dividends. But what most people don't talk about is the fact that 4% is great, but not if you don't need the dividends right now. Like, I don't need 4% right now. Like, believe it or not, I'm actually taking my dividends from all of my stuff. Oh, hey, there I am, coming back, kind of, maybe. There we go. All right, so all the dividends that I'm getting paid out right now, like if we go in here and let's see, I gotta keep moving my face around here. So if we go over here, like all these dividends, I just reinvest this stuff back in. So, I mean, technically I have to pay taxes on this stuff now. And then, it goes back into my portfolio. It's great. Don't get me wrong. I actually get really excited about dividends. I even have a whole spreadsheet right over here that we'll kind of break down here in just a little bit. But I'm like jumping back and forth now. But like what a lot of people don't understand is that like if you're not needing the dividends now, like why focus on the 4%? So what I like to focus in on is good growth on my stuff. Oh, there I am. I'm like way up here now. Man, I'm like massive picture here. So, all right, so we have the dividend yield, right? So currently the dividend yield for Apple is 0.68. But I like to look at yield on cost. Now, if you don't know what yield on cost is, it's whatever you're buying the stock for today, that's the yield that you are getting, right? So with Apple, you saw it was 0.68. So if you put in the money now, that's what your yield is. If you don't buy anymore or you don't sell anything over the next couple of years, your yield can go up if the dividend stock increases, or if the dividend yield if the dividend yield increases, then your yield on cost will actually go up as well too, which is fantastic. So the way this chart reads is always backwards. So I just like to let people know this is current times right here. And you can see this is 5 years ago. So if we kind of hover over here, you see that 0.68%. Now, obviously, it kind of moves up and down with the market. And then it's inverse with the market, just so you guys know. So you can see here, if you purchased Apple stock 5 years ago, obviously, this is a little bit better up here, so we're just going to pretend you bought it back in May 6th of 2016. Your yield right now, if you didn't buy any more, you didn't sell anything, nothing, your yield would be 3.54%. And the reason for that is because Apple is increasing their dividend year after year, sometimes 6, 7, 8, 10, 12%. And that has a huge impact. So yeah, like to me, that's awesome. Like, sure, buying in now is not really great, but buying in back then might not have looked great either. Maybe the interest or the dividend yield might have been low as well. It might have been maybe 1.5%, but it kept growing. So that's what I like. That's my stuff. Like, let's go ahead and look at the 10 years. So if you bought it 10 years ago, look at that. 6.53%. Now, remember, I don't need these dividends for another about 14 years, give or take. I kind of want to spend this money in my mid 40s, I think I was saying, where I want to go ahead and spend it on like travel and like leisure and things that aren't important, but or I shouldn't say not important, not necessary, but are important to me. So for us, this is kind of like the savings account for being able to do really, really cool stuff. And 6.5% is a pretty good return on my money, obviously in 10 years' time. Now, that's not a guarantee that Apple's going to be able to perform this kind of yield over the next 10 years, but if they could, I'm totally happy with getting a 6.8% 10 years from now and not today. Because getting if I can get 6.53 from Apple today, I would. But getting a 6.3% from a lot of companies today usually means that their dividend growth rate is not anywhere close to where these companies are. Let's go to the max. Let's see if it shows here. Let that load up. Looks like it might be frozen there for a second. So this is kind of wonky here. Yeah, okay, so like check this out. Like if you bought Apple stock back in 1991, they weren't paying a dividend, but you would get 135% on your money. If you bought it during like the .com stuff, where was that? Like, look at that. When it like just dropped like a rock, 275%, 350%. Like, that's insane. Let's see, where was 2008 crash? Probably somewhere like around here. 25% on your money. But again, remember, the big thing with some of these dates is that they weren't paying a dividend yet. So the reason you can see this yield on cost is if you were buying in at that time, it might be worth it. So when I go back over here, let that load up, and granted, they're not performing very well right now, but I'm long-term, as you guys know this. So if we look at this, if I can get my pen to work, I don't think my pen's going to work. So if we look at Airbnb, we have 5.70 shares. We're down about 10%. Whatever. I'm in it long term. I'm gonna be still investing in this company. But when they eventually, potentially, one day, start paying out a dividend, having these shares now means that my yield on cost is going to be way better than somebody who's buying in right when their dividend first gets announced, because the stock might even increase more. They might do splits and all this other crazy stuff that brings the value, even though splits don't add value. I know that, but it gets people excited. So if they did like splits, if they did, the dividend payouts, they start doing that gets people excited. Other great things happen over the years that will be there. Now, obviously, there's a chance that these companies might not pay out dividends. There's a good chance that these companies can go down or under or whatever the case may be. But that's why I have 25 holdings. Like, I got multiple holdings here because I am being diverse, making sure that my money is not all in one company, but I also want to be diverse enough to have different companies with the opportunity for growth, opportunity for more dividends, because I love dividends. So I also have the Etsy and the Square because I think both of those companies as well over time might be able to start paying out a dividend as well. Visa does it, MasterCard pays out dividends as well. I could see it in about 10 plus years. Maybe Square might do the same thing if their growth maybe slows down a little bit, but they, are still having good projections over the years. Who knows? Maybe Amazon might, Google, Facebook, Tesla, maybe one day. We'll see because we just don't know. But I might as well get my foot in the door now when the prices are better than in 10, 15 years when the prices might be much higher to be able to buy in to get those dividends. When in 10 years, I'm getting closer and closer to needing those dividends than I am today, right? Like that's the way I kind of see it. So it's my little rant on having dividend or having growth stocks in my dividend portfolio that even though they don't pay out a dividend right now, I still intend to hopefully one day get dividends from them. So yeah, let me see. Like if I look in here, so I got like Amazon, Tesla, Facebook, and all that stuff. Like that'd be cool if one day these companies are paying out dividends. Now that means obviously maybe they don't see as big of a growth potential as they do now, and I think that'll be okay. I think every company at some point kind of gets to that level where paying out a dividend might be more advantageous than just focusing in on the growth. So I'm okay with that. I mean, a lot of great companies pay out dividends and still have really good growth. Apple does it, Microsoft does it. They both pay out dividends. Maybe not the best in the world, but a little bit. And they still have some really good growth as well too. So that's kind of that rant there as far as like having those dividends and the growth stocks kind of mixed in together, because I know a lot, again, people talk about that 4% or just focusing solely on dividends. Because I recently actually sold off, I'm going to go here and I'll show you guys. I recently sold off a lot of different stocks. And I showed this in a previous video. Probably still don't have my pen. I don't know why it's not working, but we sold off Pepsi, Realty Income, AT&T, Procter & Gamble, and then the S&P 500 growth, all because I feel like focusing a little bit more on the companies that I want now versus maybe some of these companies that do pay out a good dividend, like, Realty Income and AT&T pay out great dividends, but their growth is so stagnant, so stagnant. Let's go back in here. Let's go to Realty Income. Hey, my face is gone again. All right, so let's see here. So the dividend yield right now with Realty Income is 4.34%. If we go to the yield on cost, remember we're going from left to right. Maybe I get my pen now. Yay. So again, left to right. That's kind of the way this whole thing works here. So if you were to buy today, you're getting 4.39% yield. That's a solid yield. Look, if you bought 5 years ago, 4.59%. Now, that's not a bad thing that you're still getting 4% on your money, but also consider that 5 years ago, your money is worth more than it is today, right? Inflation and everything else erodes your cash and your money. So if the value of the dividend isn't going up a decent amount every single year, that is actually not the best thing in the world, because now if you're getting the same payout every year without good growth, you're effectively either keeping up with inflation or losing value on your money. And that's a huge thing. So they used to show like the dividend growth and stuff like that on this website, but not as much as far as easy way to tell. So Realty Income grows about 2% a year. That's definitely a little bit better than the sector, so that's really good. But 2% a year, I mean, you're keeping up with inflation at that point. Like that's like the most you're doing. Let me see if I can back out. Oop, zoom in too far. There we are. Like that's not a lot, right? So if we go to Apple, see, I can actually just click right here. So with Apple, the 1 year growth here is 6.25%. You can see that, the 5 year growth, 9.54%. I mean, you're getting better growth opportunity with Apple than you are with Realty Income. Let's actually look at the 5 years for Realty Income. 5 years, 3.89, better than the last year. Last 3 years is getting closer and closer to what the 1 year was, so the 5 years might definitely diminish over time. But again, you got to consider those things. Like, do you want 8% growth every year on your dividends, or do you want the 2%? But then that matters of like where you are in the situation. Are you ready to retire or stop working and live off of those dividends? Or are you somebody who doesn't need them like myself for another 14, 15, 16 years? So you're saying, hey, why would I stagnate my growth now when I can, focus in on the high growth, like somebody like Apple, have high dividends, and then have my money when I need it in like 14, 15 years. That's something for people to think about. Like, what's going to be the opportunity for them, where they kind of want to go with all this stuff too. So let's kind of take a look here and see with this portfolio. So I'm going to go over the last month or so, give or take, just to kind of take a look at some stuff. So most of our sectors were doing pretty good. We got like tech doing, up in the positive. Growth was the only one that was down. Retail was doing really well, and so was financials. You can see industries is doing pretty well here too. If you've followed along here on the channel before, one thing I like to show people too is that like when stocks are down, like I'll buy the dips, like 100% I'm buying the dips. And I want to show you this because if I'm telling you to do, I'm not telling you to do anything actually. This is not, financial advice, but when I mention something, I'm doing it too, right? So if I'm saying, hey, I'm buying, I think buying the dip right now is great, I'm doing it myself. I'm not saying people should do it. I'm just showing you, not just because I'm saying it, but I'm actually doing it too. So Lockheed Martin, I know I got some fans out there that are also Lockheed Martin fans. So they were down in my portfolio for weeks. I think since like December of 2020 or something like that. Like it's been down for a long, long time. But more recently, just over the last few weeks, they were doing really, really well. So I think they're above our share price. Yeah, so they're 364. My share price is 355. So that they're finally back up above. But like for weeks on end, I was like in the negative, like I was down, right? Like whatever I put in, I was less than, kind of like you saw with Airbnb, my value was down. But just over the last month or so, the stock had rose. Like let's load this up. I just like to show this because I think this will help people get some really good ideas of like buying dips and going through. So like, look at this. Where was it? So like November it dropped, and then December, for me at least, it was lower than my averages. And then like, look at this, all this from like November all the way down to January, it just kept dropping. And that's a scary thing to do, right? Oh man, I'm like off screen again. Like a really scary thing to do. And then it like plateaued for a little bit. And then just over the last like 2 weeks, it just kind of like went right back up. And now I'm personally in the positive. I think other people who are following along might be in the positive too, but like that's a big thing. Right? Like now that it's kind of back in the positive, I'm slowing down on how much I'm putting into this stock. And instead, I'm kind of now focusing in on other stocks that are down in my portfolio and buying more into the dips on those ones. And I feel like that's a really interesting way to kind of go about my portfolio, which is whatever's down the most, that's what I'm going to put the most into. I'm not saying all of it. I'm just saying that's where I'm kind of putting in my focus. I'll show you guys too. Not that you don't believe me, but I'm going to show you right over here. So Lockheed Martin, let's see if I can just move this over here. So you can see, so I just bought a little bit so I can get to a 3 share number because that looked really nice. But, I bought in March 22nd for quite a bit. Oh, that was actually when I did my selling off of a couple stocks and bought a lot into Lockheed Martin. But you can see here like $40, $20, $40, $25, all these different amounts right here. Like a couple times a week I was buying in. I think all the way back in December, I was like manually buying into the stock because it was just so valuable to me in comparison to where I originally bought it, and knowing that it's gonna, most likely go back up. I could have been wrong, but obviously I wasn't in that case. And for me personally, like that's what I'm doing. So when I look at my holdings and I'm just like, okay, well, what am I down on the most? Obviously, these are the 3 newest stocks, and I'm like down on them already. But like that being down 10% on Airbnb, that doesn't worry me because I don't need this money for another 14 years. I'm just going to throw more money at this now. I'm just going to be like, hey, I can get a better deal. Now, granted, if I waited a little bit, that would have been nice, but nobody knows this stuff. So anybody that says they do, I mean, there's ways you can kind of get some ideas, but when it comes to the most part, I mean, sometimes these stocks just go one way or another. But I think I'm going to be buying more into Airbnb, Etsy, and Square. I've been buying a little bit more into Amazon recently too. They've kind of been flat for a while. Let me show you guys here. If I know how to spell Amazon. There we go. Let's get me back in there. So I'll show you guys here with Amazon. So they've been relatively flat for quite some time, but I've noticed kind of like a trend with Amazon, like right here, When they got to like around 2000, they stayed flat, kind of went underneath for a little bit, and then bam, they went up to 3000. Granted, with everything going on in 2020. But I mean, even if you go back 10 years, kind of similar things. It's like there's always like a little bit of a flat or slow growth, and then you get some really nice exponential growth there too. So, I think Amazon's here to stay for a very long time. That doesn't mean things can't change. I think that's one thing a lot of people have to come to like a realization for, because, I'm pretty sure people probably thought the same thing with like companies like Kmart, JCPenney, or Sears, or any of these other big companies that over time just kind of corroded in a way. I'm not saying that these companies will fall along the same lines, but they could. But I think people have to be ready for that kind of stuff too. So for me, I think it's a good time for me to purchase into Amazon. Looking at their numbers, looking at all their different stuff. Like if I go to the news, like what's going on recently? I don't think there's anything crazy big has been going on for the most part with Amazon. Obviously, with Jeff Bezos having, stepped away for, some extra work that he wants to do outside of Amazon. It'll be interesting to see. I know, when Apple had that happen with, Steve Jobs passing away, Tim Cook obviously did a great job keeping the company going, because I think it's really fearful when one of the main founders, something happens to them. But yeah, look, I mean, if anything, Apple actually has exponentially grown since everything has passed and gone to Tim. So it'll be interesting to see where this goes with Amazon. So I'm buying more. I'm going to be buying more into them. Nextera Energy has been down for a little while in my portfolio, but they've kind of been coming back. But yeah, look, Lockheed Martin is now in the green. It'll probably go back down a little bit here and there, but happy to see them in the green. They pay a healthy dividend, and they also have a dividend growth that is really, really nice as well. Digital Realty Trust was also down on my portfolio too as well. Let me know in the comments down below. Do you guys have any companies that have been down for a little while in your portfolio, and are you buying in those dips? Because I think that's a big thing, right? Like buying into the dip, I think is crucial. Also too, really quick, before we continue on, is that like stuck on there? Oh, it's probably just somewhere on the screen and I just can't see it. Oh, there it is. So I hit it from myself. So if you guys are interested in checking out M1 Finance, which is this platform right over here, I will have a link for them in the show notes down below. Does help support out the channel, but it actually gives you a $30 bonus for using my link as well. So I'm just gonna write 30 on here. $30 bonus, and minimum is $100 to get started in the account, but to get that $30 bonus, or to just really get your account started, you can put in $1,000 and really start seeing your stuff grow. It's probably one of my favorite long-term platforms, even though I use like a whole bunch of other ones too. You guys have maybe seen the channel here where I like post a bunch of different stuff. Let me zoom back in here. But yeah, just kind of wanted to give you guys a heads up on that. So let's go ahead and show you guys here really quick some of the different stuff that's been going on here on the I was gonna say on the platform, but on the account. So I did 11 buys here on the 25th. So this one I put $300. I've been trying to do about 300 a week minimum. Sometimes I'm doing a little bit more here and there, especially with these like ups and downs in the market. When there's a nice little down, I'll actually toss in a little bit more. So you can see here 11 buys, which, considering 25 holdings, this is a good chunk of my portfolio getting some, love in there. That's a big thing too of dropping out some of those stocks that you saw earlier, like Pepsi, AT&T, and Realty Income, is that I'm getting rid of some companies that are just not doing it for me anymore. And then I have now more to be able to go through with smaller numbers. So when I put in $100, there's a better chance that more stocks are going to get it versus less, because I have 25 holdings versus 27 back then, because I sold 5, added 3 new companies in, and so that still gave me a net of -2 on my holdings. But you can see here we did like Visa, we did Apple, we did Etsy, new residential investments, or NRZ for a lot of people, which, by the way, this one's a pretty awesome stock. I was dollar cost averaging for the longest time on this one, so I have like a dollar cost average of like $8.50, $8.90 or something like that, somewhere around that range, and like the stock is back up to $11, so that's nice. Some decent amount into Tesla, some into Square, Facebook, a good chunk into Airbnb, a little bit into Google, Amazon, a good chunk, and then Nextera Energy too. Now it's cool with Google and Amazon, I don't have a full share yet of either one of these two companies. Oh, you can see that real quick. Look, I got 79 shares into NRZ, which is pretty cool. And I'm up about 25% on them. So that's nice. So you can see here. So with Amazon, I have about almost half a share, a little over half a share. And then Google, I have about 62% of a share. So these are the last two companies for me to like go over and hit over a share, which is obviously not imperative when it comes to being able to buy in fractional shares, which M1 Finance lets you do. But it's just kind of like one of those things where I'm really excited to one day hit that mark. I hope to do it before they ever potentially split their stock, just like Tesla or Apple did the year before. So just that way, if they split it, it's not only because they split it, but it's because I was buying into them. So hopefully that's going to happen. I don't know, sometime before the end of this next year, or within the next year, I should say, that I get over one full share of each of these companies. And if they split, even better. Even though splitting, like I mentioned earlier, I know it doesn't do anything to the company as far as value or anything else, but it does get a lot of people excited. Lowering that dollar amount does kind of get it really into people's heads of like mental, or like subconsciously, I should say, where it's like exciting to be able to be getting into these full shares. Like if I go back here, like you can see my Apple shares, I have 30 shares. They split, I think it was 4-1 last year or the year before or whatever. And, so if I consider that, I would obviously not have 30 shares. I'd have less than that. But they also split multiple times prior to that too. So you can take that with whatever you want. But like, to me, it's exciting to say like, hey, I got 30 shares of, Apple, and, hopefully one day I can get to 100. And then, my goal would be actually to get to 100 before they ever potentially do another split. Because they did a split 4 years ago, and then it got to $400 or $500, and then they did that other split again back in 2020. So for me, I'm just like, that would be really exciting to get to 100 shares, and then they do a 4-1 split again, and then I have 400 shares. Even though the numbers still come out the same as far as how much ownership I have, there's just something about it that it's just like, that seems so cool. Because yeah, I mean, the biggest company that I have as far as amount of shares is NRZ at 79. I'll probably get to 100 sometime in the future, but like that will be really cool. But then I have like, after that is Apple, because it's my biggest holding value wise, I believe. And then you can see here after that, it drops pretty significantly to like 19 shares, 17 shares, 15 shares, which is not bad. I mean, when you consider that these have like, thousands of dollars in some of them, like Microsoft, I have $3,000 in, Next Era Energy, I have $1,500 and all that stuff. Like, it's not necessarily a bad thing. But it is kind of good to have lower the amount of shares, or the amount of positions I do total have in this account. But the fact that like I'm growing my holdings to a significant margin, and I got quite a few of them that are in those still the single digits when you consider the whole number there. And then I have Texas Instrument that's under 2, and then those two at the bottom that are still just by themselves less than one full share. But hey, no problem. It's all, working towards some bigger goals. But I think it just kind of gets me excited, because getting paid out dividends gets exciting. Hitting new dollar or new share numbers is really exciting. I kind of mentioned earlier that I put in a little bit of money into Lockheed Martin, but that was to get it right over the 3 share marker, because I was at 2.99 shares. So like that actually entices me to want to invest more, which is great, right? The more I can invest in, the better, because I'm not sitting here trying to time the market. I'm not sitting here trying to do anything more than just put my money in, see it growing, get into good companies, pay attention to what these companies are doing. If they're slowing down, or if they're not doing what I would hope that they're doing, that I'll move out of them. But the focus is that these are the companies I want to be involved with. You can see here like Johnson & Johnson, by the way, is like 4.98. So like I might want to do the numbers and see, okay, how much more do I need to put in to get it to over 5? And then for a while, I'll just kind of let M1 Finance do its thing, or, invest a little bit here and there. But those kind of things excite me. And it's like, hey, that's an extra couple bucks that I might toss into this company that I might not have otherwise. And then kind of move on from there as well too. But that's just kind of my sights on this, is just kind of getting excited with investing, because to be fair, like as much as I love doing this and I love sharing this stuff with you guys, is that, investing can get boring sometimes for people. I love it so much, which is why I have this YouTube channel. And I do tutorials on my main channel as well too. So I love investing, and I love kind of like all the things going on with it. But I know for a lot of people, day to day, it can be a little, diminishing as far as like your excitement return. It could be, a little tiresome to see the market constantly going down, whatever the case may be. But for me, these kind of things keep me going, right? When the market's down, then I say, okay, cool, I can buy more, which gives me, more shares, and I can keep moving forward. Because if I go back in here, so I put another $100 in the next day after doing the 300. So I put a decent amount more in this week, plus with my dividends that I got from Lockheed Martin, which was cool. You can see I put $4 into Lockheed Martin, and it got me zero point 0.01 shares, which got me over the 3. But like, that stuff excites me. Like, that's awesome for me. And then I put in more into Square, Etsy, and Airbnb. I put $78 into Airbnb, got me almost half a share. So like, in the future, when the stock goes back up and everything's just doing really well, I'll be like, man, I'm so glad that I put in that, $78 to get that half share, because now buying into that half share is going to probably cost me, $300, $400, whatever the cost is on that. But that's just one way to see it, one way to do it. I like sharing this stuff with you guys because I think it can help other people. I think it can get you excited for investing for the future, investing long term, and not trying to game the system where you're buying and selling so quickly just to make a quick profit. If that's like your case, I don't know if this is like the right videos for you, because this is daily stuff, just doing uploads to share with you guys my journey, so you guys can see. Today I'm at 27,000. I think when I split my original channel up from True Financials to this as well too, I think I was like maybe getting close to 20,000. I'll have to double check actually. That'd be really interesting to see where I was on the journey, because I actually started on my original True Financials channel, which is now just mainly tutorials. This stuff was like day one, pretty much. Like, I was starting around like this area here, sharing with you guys, because I want to just have a journey of like what I'm doing and how I'm doing it, and if it works, if it doesn't work, you guys can essentially follow along, right? Like, you get to see this happening in real time. You get to see my decisions, if they're actually beneficial for me or if they're gonna hurt me. Like, is selling out of those 5 stocks that paid out some decent dividends and getting into 3 stocks that paid no dividends, how big of an effect is that going to have on my portfolio? Am I going to see, huge drops in dividend income every single month? Am I going to regret it? All those kind of things. I find it fascinating. Like, I think it's so cool to share this kind of stuff. It's not, this is not like super high energy kind of, what is it like, buy these 20 stocks now and 10x your money and all that kind of stuff. Like, that's not what this channel is about. That's not what this, journey for me is about. This journey is, slow growth. It is being really, thoughtful with my actions and what I do, because I think now it's 14 years, but I think in 14 years, it'll be so cool for you guys to be like, whoa, man, I was there when he had 27,000, or I was there when he had 50,000, or whatever, whenever you like subscribed, and like that dollar amount, like, that'll be like your entry point into the journey. And then you'll see it where, 14 years from now, maybe you were sitting at $500,000, $1 million in the account. Who knows? But I think it's going to just be really, really cool to kind of just see that journey happening in real time. And I hope you guys are enjoying these kind of videos, because this kind of stuff is a little different than my main channel. And I don't really make like crazy amounts with this channel either. This is really just for like my passion project as far as my journey. But obviously, subscribing, hitting the like button really goes a long way. And if you guys use any of the links usually in my descriptions, that does actually go directly towards my progress with my journey with investing, with running my businesses, and everything else as well too. So I really do appreciate it. Normally I have other videos right here, so you guys can like watch more, kind of learn more when it comes to investing if you guys want to. Hopefully you guys are listening in at this point still, because usually towards the end of videos, like, you're getting like 20-30% of people still watching, maybe if you're lucky. So I will see you guys in that next video. Thank you so much for watching.